Alright, hey, what's up guys? Scott here again with my next live trading video. Today is Friday, June 24th, and for this one here, I'll be showing you all how I in particular manage a situation, more rare situations, where a stock closes the day pretty much right on one of my short option strikes. And this actually happened to me yesterday with Alibaba, as you can see here, and this is the trade I'll be reviewing in today's video. So basically yesterday Alibaba closed almost right on my short call strike, and then also it gapped up higher overnight. So in particular for this video, I'll be reviewing the exact adjustments I made this morning to compensate for all that happening. Now real quick here, I have a very cool limited time opportunity for you guys where you can receive up to 10 free stocks, and each stock could be worth up to 2,500 bucks. So basically there is a newer brokerage company out there called Moomoo, which is based in Palo Alto, California. And again, for a limited time, they are offering the opportunity for you to receive up to 10 free stocks when you sign up for a brokerage account with them using my link in the description of this video. And I did also sign up with Moomoo myself as well, and I got a lot of free shares of DraftKings, which is pretty darn cool. But again, you could get lucky and win some full shares of stocks like Tesla and Google as well. And so if that sounds interesting to any of you guys, then again, check out my link in the description of this video to sign up and get your free stocks. And then secondly here, in case any of you are brand new to the channel, again, my name is Scott, and you can also find me on SKILLSHARE as well, where you can take my very detailed classes on options trading or stock market investing. And you'll also find some links to a few of my introductory courses in the description of this video as well. So be sure to check them out, and when you sign up for SKILLSHARE using any of those links, you'll get a full 1-month free trial. Alright guys, so now diving in here and focusing on my Alibaba position, which as I said is the focus of today's video. And first up here, I'll give you some brief context around the initial intent of this trade. So first we'll come over to the trade tab here and take a look at the option chain for Alibaba. And for this position, I'm currently in the July 8th weekly expiration cycle, which now only has 14 days to go. And originally with this trade, I was simply short one call option contract with a 110 strike. And so at the time I sold this contract, Alibaba was well below 110, so this option here was out of the money, meant to be simply a naked call option to play for a downside move in the stock here. Now unfortunately, if we come back to the charts real quick here, and we'll zoom in a little bit, and so keeping in mind my call strike, my original call strike was right here at 110. As you can see in the recent past, Alibaba has been very choppy and moving in a pretty sideways fashion right around 110 bucks per share. Now with my particular option trading strategy, which many of you have seen if you've watched my previous live trading videos, is when I do sell, in this case, a short call option, and then the stock goes above my call strike, at around that point, I will purchase 100 shares of the stock, right? Because in doing so, I basically convert my initially naked call option into a covered call option. And therefore, as a result of doing that, it does not matter how much higher the stock goes after that point. I can still walk away basically by the expiration date with some sort of profit. Now that being said, of course, one of the main issues that can occur with this kind of approach is, in this case with Alibaba, the stock can repeatedly bounce through my call strike many times, which therefore requires me to have to repeatedly buy the stock and then sell it once it falls back below my call strike each time for a small loss. And if this happens enough times, which in this case with Alibaba it did, then those small losses will start to add up significantly. And then at that point, I will have to make an adjustment to the trade to collect additional credit. So now, just to make this all more concrete, let's come back to the trade tab for Alibaba. So again, as I was explaining, Alibaba was bouncing through my 110 call strike here multiple times. And consequently, I was facing losses again and again from having to repeatedly buy and sell the stock each time that happened. And ultimately, I sold that call option for a starting credit of 300 bucks, and I did end up losing more than that from the stock repeatedly bouncing through my strike there. And that's why, to compensate for that, I also sold an 86 strike put option, which is right here, and did so at the time for about 200 bucks. And so of course the whole point of doing that is now that 200 bucks of additional credit that I collected with the put option here has compensated to some degree with the losses I face from having to repeatedly buy and sell the stock. And so ultimately here, up until this morning, this was the current state of my position. I was short an 86 strike put option alongside a 110 strike call option. Now, like I mentioned though, with the call side here, yesterday Alibaba did close almost right on my call strike here of 110. In particular, Alibaba closed at around 112 bucks per share. And so technically speaking, like I was explaining, if the stock is above my short call strike, then I should be long or I should purchase 100 shares of the stock. And that's originally what I did. Right the moment that Alibaba breached my call strike here, I had automatic orders in place that would purchase 100 shares of the stock. Now, normally, if Alibaba just kept on going higher and higher after that point and perhaps closed well above my short call strike, then I would not have to do anything before the market did close, right? Because even though there is always a risk that overnight or perhaps tomorrow morning in pre-market trading, the stock could gap down in a huge way, it's still pretty unlikely. So again, with my call strike at 110, and if perhaps let's say Baba closed at 120, then again, the chance that Alibaba would gap down by more than $10 in just one night, that's very, very unlikely. So therefore, I personally would not have any issue with holding the full 100 shares overnight. But of course, in cases like this, where the stock closes very close to my call strike, then even a small overnight move against my position here could create some pretty big losses the next day. And so that's why right before the market closed yesterday, I sold 50 of those shares for a very small profit, right? Because again, Alibaba crossed 110 here, and right around that point, I bought the full 100 shares. And then once the stock reached 112, and once the market was about to close, I sold 50 of those shares again for a small profit. So that means overnight, I was simply holding 50 shares of stock instead of the usual 100. And so now fast forwarding to today, this morning basically, Alibaba did actually have a gap move, but it actually gapped higher as opposed to lower, which is what I was mostly worried about. So ultimately here in hindsight, the best move was to make no move at all and just hold the 100 shares long overnight. But of course, you can't predict what's going to happen the next day. And so at this point, that brings me over to the monitor tab here, where you can see the 3 adjustments I made this morning for my Baba position. So first up here, the first thing I did this morning was to sell my long 50 shares of stock for another small profit. And so I'll go ahead and pull up the calculator real quick here. And so as you can see here with this order, I sold the shares for a price of $115.02. So 115.02. And originally yesterday, I bought those shares at a price of $110.98, right just above my original short call strike of 110. So this means I made a profit of $4.04 per share times 50 shares. That's a total profit of $202. And then after that, with the next trade here I made this morning, I basically rolled up my call strike from the 110 strike to the 116 strike, which at the time was about a full dollar above the current trading price of Alibaba, right at 115. So basically, I moved my call strike to be out of the money once again, and I paid a debit to do this of $315. So that was a bit pricey, but again, keep in mind, I did make $202 on the long stock. So therefore, if I subtract 315 here, the total net loss was only $113, not too bad. And then lastly here, as you can see with my final order, I did buy back my 86 strike put option, which was that original adjustment I made a little while ago. And the reason why I did this is simply because now with this stock being so much higher, the price of this put option has fallen almost to near zero, right? Originally, I sold this put option for over $200 in credit, and today I was able to buy it back for a debit of only $23. So finally, we'll subtract 23 here, and the total loss I took this morning was only $136, not too bad. Now, the alternative thing I could have done this morning is instead of rolling my strikes and buying back the put and doing all this extra stuff, I simply could have just bought 50 more shares of stock this morning to give myself the full 100 once again. But the reason why I did not do that is because, again, with my approach, if the stock falls down below my call strike, which in that case was 110, at that point, I would sell the full 100 shares. And so ultimately, if this morning I bought 50 more shares, but at a much, much higher price than I would like to, at around 115, then if the stock reversed and fell all the way back down below 110, I would face a much, much larger loss than only 136 here. Right, just the 50 shares I could have bought today at a price of around 115. If I sold those shares for a loss at around 110, that would be a loss of $5 per share, which times 50 shares is $250. And then of course also I would sell the original 50 shares for a loss as well. So the combined effect here would certainly be much, much larger than only 136. And so now at this point, if we come back to the trade tab, the new state of my position is simply one call option with now a 116 strike. Now that said, because of this small loss I took this morning, that 136 that you saw there, my total net remaining credit on this position is now negative. So basically, if today was the expiration day, then I would have a total net loss on this trade of about 114 bucks, which is still very, very manageable. But of course, also there still is 2 weeks left to go, so I'm definitely not out of the woods yet. But do also keep in mind, I can always sell a new put option here for a lot more in additional credit. Right? For example, I could sell perhaps the 105 strike put options here for almost 200 bucks. And if I did so, that would bring my total net credit on this trade back to being positive again. But that being said, I do want to be a bit patient here because if you come back to the charts real quick, I do personally think that Alibaba is going to run into some resistance somewhere in this price range here, maybe at around 120 bucks per share at the most. We'll see what happens, of course. But point being is I do want to wait a little bit at least to see if this stock does actually reverse anytime soon and perhaps falls to a much lower price. In which case, if that did happen, then coming back to the trade tab one last time here, then perhaps maybe the 100 strike put options or perhaps even the 95 strike put options would then be worth around 200 bucks a piece, and therefore give myself a much wider position here. Right? Because basically, whenever I sell a put option against an existing call option, I now have a short strangle position on, which means I want the stock at that point to remain in between my strikes here. So naturally, of course, the wider the range, the better the chance I have of the stock simply staying in between that range. And that would be the ideal scenario, right? Because in that case, I would not have to deal with buying or shorting the stock or making adjustments, things like that. I could simply sit back and watch my options expire worthless. And so with all that being said, that's going to do it for this video. I hope all this made sense, but if not, of course, please let me know your thoughts or if you have questions in the comment section below. And don't forget, if you want up to 10 free stocks with Moomoo, then again, use my link in the description of this video. And also here, if any of you have an interest in taking some detailed classes on options trading or stock market investing, then check out my SKILLSHARE courses. Links also in the description of this video. And finally here, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week, and you don't want to miss out. So thanks again for watching, and I'll see you next time.